I think that you guys are bringing up something very, very important, the 203K. And I want to back up a little bit for those that may not understand really what that is. Is that something that people can take advantage of no matter the state that they live in? I mean, I'm thinking about when we started our first investment property in 2008. That was my biggest concern, was that we had a rehabber, and we didn't know if he was taking advantage of us. We didn't know if he really completed everything that he was supposed to be doing. So it sounds like to me that you guys are bringing up a great program that is called the 203K, and that whoever's doing the work on the property, they can't get to the next payout, which is the next phase, until they do maybe step A first, right? Yeah. So break that down, because I think that this may be a new term that some people may not be aware of. Is this something that everybody can take advantage of?
Yeah, what are the stipulations?
Who's a prime candidate for it? Where can it be done at?
Because, all right, depending on the loan amount, you know, the schedule is made by the contractor, and you have to present like 3 contractors before you choose one. They require that. And let's say the draws are going to be $100,000. It'll be like 4 draws of $25,000. And each draw has like 3 or 4 objectives that are checked off from the line item budget. And for that first draw, that contractor has to use their own money to accomplish the first draw. That means that they have skin in the game. Unlike when you're flipping with your own money or with private money, these contractors have to put their own money into the work, which then gives them the incentive to want to continue completing each draw, because then they get paid at the end on the last draws when they make their profit.
So it's a 203K.
And it can be done. And this is, FHA, Federal Housing Authority, federal meaning anywhere in the 50 states, United States, that you live, you're eligible to get this FHA loan. And then the actual loan, the total cost, whatever you are pre-qualified for. So if you're an individual that's pre-qualified for $200,000, easy math, the all-in cost. So the purchase of the property may be $150,000, and the renovation may be $50,000. So that's a total of $200,000. And then if you've chosen right, because we all know we make money on the buy. Okay, you make the money on the buy. If you buy correctly, then the likelihood of you making a profit is so much greater. So then if that property, let's say the after rehab value, the ARV, is $250,000, you're walking into $50,000 in equity at the end of the project. So, and that's the objective. Then you hold on to the property for 12 months to meet the standard for you to be able to be eligible to sell it and walk away with the profit with no capital gains tax.
That sounds amazing.
Yeah. Do they have to be a first-time home buyer to qualify? Do they have to live in the property? What are some of the ins and outs to that?
Yeah, on paper they say you have to make the commitment to live in there. Right, and you have to live in the property as your primary residence for 12 months. So, like play the game correctly.
Right, play the game.
And the thing is, it's like a lot of times these projects take 3 or 4 months to complete. So now, by the time you finish the project, you got 9 more months to go. You got 8 more months to go. And on top of that, it's a brand new house. You might enjoy living in it for a little while and enjoying it. But that's the objective. Is to renovate a property and have a home that you love. And then if after a year you have decided that you're ready to move on, then you can.
Yeah, I mean, Anthony stayed like 3 years, three and a half years.
Yeah.
In the interim, I didn't buy a condo or a single family home during that time period. My first purchase was a 3-unit apartment building. Because I think a lot of times people get caught up in this whole American dream. The American dream is, a single family home with a white picket fence. To me, it's archaic. If your first time home buyer, your first FHA loan is 3.5% down, and it can be on anything from a 1-unit
to a 4-unit
to a 4-unit building, use it on a 4-unit building. Now, for me, it was a 3-unit building, but 3.5% down on a 3-unit building, you can still get a single family home like a few months later. You do it the other way around, where you get the house first. Now they want 20% on a multi-unit building.
Right.
So it doesn't make any sense, fiscally, to start off with a single family home or a condo. It should be a multi-unit first, then go get a
Right.
house.
If you're considering real estate as a business, then your properties should be profitable, and they should be profitable. You should have some residual income, and you should go after the bigger, more difficult purchases first, and then have those money makers be used as income for you to buy the dream home that you ultimately have. So that's what we endorse for first-time home buyers. We encourage everyone to go out and get a multi-unit property with a 3.5% down loan, that down payment first.
Man, now y'all ready for the cheat code?
We're ready. We're ready.
Now the cheat code is, one, work with small banks and credit unions, right? When I got that first property, it was with Illinois Service Federal, which in Illinois, black owned. Well, now it's Ghanaian, but it's still black. Ghanaians are black.
Yeah.
So,
with it, yeah.
And as soon as I got that property, I was like, I told the loan officer, I want another one, and I don't want to put 20% down. How do I avoid doing that? He said, find a better neighborhood, higher, value multi-unit building with a greater square footage. Then write a letter. The letter was 3 sentences long. To whom it may concern, I want to live in a better neighborhood. The square footage of the property, I found the property first. Is whatever the square footage was, and I intend on living there instead of the property I'm currently in. I submitted that letter, got the pre-approval and all of that. Boom, got that. Now I'm moving from this 3-unit into the next 3-unit. I got 2 3-unit buildings, and for 3.5% down. The refi. And I forgot to tell you, because FHA, you can only have one of those loans at a time. I refinanced out of the first FHA loan to conventional to make me able to qualify for FHA again.
Absolutely.
And then with that letter, boom, now I got 2 for 3.5% down, 3.5% down.
And did you do all of this with the same bank, the refi?
Yes,
and everything?
Right.
This is
That's good information.
This is what I've been telling people, or I've been telling a lot of people it's my one, it's literally my one financial regret, right? And what I've been saying over and over and over and over lately is you got to play chess. You got to stop playing checkers. We've had several people at our church and just around us.
People that you're mentoring. Yeah,
that I mentor, and they're newly married, and they're talking about, okay, so how do I prepare for a house? I said, bro, forget a house. No. I've told each and every one exactly what you just said. You got to play chess. I said, scenario A is you get yourself in position credit, down payment wise, to get a house, and a year goes by and all you got is a house. I said, or you can get yourself in position credit wise, down payment wise, and buy a building, live in one rent free, let the other units pay for the mortgage. And now you can sell after 12 months, or you can just move after 12 months. You got to follow the rules that you just outlined. And then you can go do it again. So 12 months from now, you can have a house, or 12 months from now, you can have a house and a cash flowing entity.
Well, talk about one of the gentlemen that you were mentoring. He did just that. He and his wife purchased and they have 2 children. They purchased a 2-flat, I think?
Yep.
2 flats.
That's going to be a 3 because they're going to do the basement.
Yep, they're loving it. And now they're about to purchase their another unit, right? And he's partnering with someone that's going to actually live on the property, right? And now they have multi-units and they have more than one. It's like brilliant.
Yeah, because time is going to keep moving either way. So you might as well put chess pieces on the board instead of just playing checkers.